All right. Good afternoon. My name is Parker Davis with the City of Malibu. Thank you for participating in the LA County Assessor's Office and the City of Malibu in this virtual webinar to help property owners impacted by the Palisades Fire navigate the complex building process. In this session, the Assessor's Office will detail available property tax relief and the property assessment process during the rebuilding phase. If you have questions during this webinar, please type them in the Q&A and we will answer them at the end of the presentation. Please join me in welcoming LA County Assessor Jeff Prang and Director of Rural Services Nicole White Gamble from the Assessor's Office.
Great. Thank you. Thank you very much. It's good afternoon, everybody. It's great to have this opportunity to visit with you this afternoon. I did want to, before we begin, express my condolences for everybody who's had their lives so impacted by this the disaster. Malibu is really a unique community, a tight-knit, resourceful, and resilient community. And having been to the city many times, I've seen the strength and the confidence that the community has that I'm certain will help you persevere through these troubled times. My team and I are obviously here to be of service in any way that we can, and I'm happy to be here to offer you some information, answer questions. I'm not going to be here for the entire program. I'm actually back east at a family event, but when I knew it was happening in Malibu, I wanted at least to get on the call and be here to get you started, to let you know how important I think that this educational format is for you as it is for my office. I want to thank the mayor for inviting me to come. And just as a quick note, I'm having a little bit of technical difficulty, so it's possible that I may be interrupted as we go through this presentation. But first, to understand how property tax relief works, permit me to briefly describe what my role is in the property tax administrative system. First of all, I oversee the largest local property assessment agency in the United States. I'm responsible for locating and valuing all taxable property in Los Angeles County. And the values of all this property compiled by my office are the foundation for the property tax system, which is valued at over $2 trillion and generates over $20 billion in property tax revenues that fund vital county services such as public schools, emergency services, parks, roads, etc. In a lot of ways, the assessor's office is the most important local government office because no other agency can do their job until we've done ours. And if we don't do our job well and thoroughly, then potential revenues, which should be collected and going into services, is left untapped. Our role in the property tax system is one piece of a very complex puzzle. There are multiple departments that each have a different piece of the chain. And the way it works is as follows. Once property is sold, you record a deed, which is recorded with the registrar recorder. Or if you do new construction, you pull a permit from the city. Those deeds and those permits come to my office, where an appraiser determines the market value. We then turn over that data to another department you're probably not familiar with, called the auditor controller. The auditor controller is the one who calculates how much you owe. They apply the taxes, the special assessments, etc. And then finally, when they're done with that, they send that data over to the treasurer tax collector, who sends you your bills and collects the payments. It's very confusing. I've always joked that it's designed for maximum public confusion. There are two main programs to assist homeowners who are impacted by natural disasters, such as the recent wildfires. The Misfortune and Calamity Relief Program allows properties damaged by a disaster to have their property's assessed value, which is the value that you're taxed on, reduced by the amount that reflects the damage or the total destruction. In turn, your property tax bill will be reduced to reflect that reduction in assessment until that time in which you begin to rebuild the property. You can apply for misfortune and calamity relief online or in person at the disaster centers or by email. There are two qualifications that must be met, and almost everybody in Malibu meets these qualifications. The damage must exceed $10,000, and you must file the claim within 12 months of the date of the incident, although I am sponsoring legislation with Senator Ben Allen to extend that application period to 24 months. If you've already paid, if you had already paid both installments of your 2024 taxes, any reduction in value to your property will result in a refund. And many of those refunds have already been issued from the auditor controller. If you've paid your um, property through an impound account through your mortgage company, you'd have to work with them to change that impound terms, but you will be getting a refund for taxes that are overpaid if your property's been damaged. One of the reasons it's important to apply for property tax relief is it gets your name into the system. It automatically qualifies you through the tax collector's office for a deferral of your property taxes, although the governor has deferred all property taxes from fire victims until April of 2026. Once your property has begun to be rebuilt, as long as it's rebuilt to a similar size and use, a classification that we call substantially equivalent, then the original pre-fire property tax obligation will be restored, adjusted 2% for inflation annually, as is required under Prop 13. The other property tax program is called decline in value, and this applies mostly to those properties that were not physically damaged, but who lost market value due to the disaster. For a home sitting by itself in a disaster area where everything's under construction may be worth less value. The law says that I'm required to enroll your assessed value, which is generally what you paid for it, or the market value, whichever is lower. Current law did present some challenges as the program only allows us to apply assessed value reductions as of January 1st of each year. And the value reductions in the fire zone occurred on January 6th, 7th, and 8th, or thereafter. So I've proposed legislation with Assemblymember Mike Gibson that will allow us to lower, to include all the fire impacted properties as of though the fire occurred on January 1st, that date that we determine the annual value. Let me take a couple minutes to share some data our office has collected from about the wildfires. Our preliminary review estimates that the total assessed land value in all affected burn areas, which includes Palisades and Altadena, is approximately $22.5 billion, with an additional $11 billion in assessed value for buildings. The damage and loss of homes are going to have a pretty big financial impact on the county budget, as well as schools and cities for many years to come. We've identified about 23,500 parcels in the wildfire area. Not all of them have been damaged. 12,000 properties have been completely destroyed. Another 2,000 have been damaged. To date, we've processed about 17,000 misfortune and calamity assessment reductions, which will result in reduced property taxes for affected owners. And you should have gotten a notice of assessment change from us. About 60% of those reductions were made based on the claims from property owners themselves, but 40% of all reductions were made proactively by my office, even though a claim had not yet been filed. The total estimated loss of assessed value so far is about 10.7 billion and may reach as high as 12 or 13 billion in enormous financial impact on the county, as I referenced. In Malibu, 1,368 parcels were affected, and 10% of all single-family homes and condos were destroyed. So far, we've reduced about 1.52 billion in assessed value in Malibu, with more claims still being processed. We'll continue to review the remaining 7,000 properties in the months ahead. There's a little chart on your screen that kind of gives you some of those statistics about how many properties were damaged. Importantly, it indicates what CAL FIRE is indicating is a damage and what percentage thereof. Our ability to process this large number of reductions, we actually were able to reduce the assessments in about 90 days after the fire. This was really helped by a new highly automated technology platform that my office has invested in over the last several years, which allowed us to use AI technology and a lot of other processes in order to process each of these reductions. Under our old system, it would have taken about 100 appraisers, months to accomplish the same thing we did in 90 days. In addition to our own internal disaster relief processes, we're collaborating with the treasurer and tax collector on tax deferrals and penalty cancellations, as well as with the audit controller, to ensure that future tax bills reflect the revised valuations and result in the appropriate refunds. One of the things we are learning in this disaster is that the property tax law is extremely rigid and doesn't really give us a lot of flexibility. So I'm sponsoring a number of pieces of legislation to help streamline the assistance for property owners and to get around some of the more rigid rules that would prevent relief from getting to property owners. As an administrator, I don't establish policy. I don't get to determine if something is if a law is meritorious or not. I'm just required to administer what the law says. But I did want to tell you what some of these pieces of legislation are that I propose that will help us to get around some of the challenges that property owners will face. I'm going to start off with one that I'm disappointed in, and this was Assembly Bill 1253. This was by Assembly Member Nick Schultz out of Burbank. One of the things that's one of the benefits for property owners that's been allowed under this disaster is the governor issued a disaster proclamation, which says that you can get an expedited permit for rebuilding, and it will allow you to rebuild up to 110% for your replacement of your original structure. The challenge is that's a building code provision. But under California law, rebuilding a structure beyond what is deemed substantially equivalent for property taxes would result in a change assessment. Assembly Bill 1253 would have aligned the assessment standards which apply to me with the building code standards which apply to the city so that you would not be dinged with a supplemental tax bill for that additional 10%. Unfortunately, it died in the state assembly. I don't know why. I can't imagine why legislators didn't think creating a convenience and benefit for fire victims was important. I don't know, but I am going to try to see if I can revive that bill. Another Senate bill, Senate Bill 663 by Senator Ben Allen. This is the one that will extend the filing the claim period from 12 to 24 months. It also increases the rebuild window from 5 to 8 years. And it also preserves pre-fire property tax exemptions for nonprofits and charitable institutions. The reason that's important on the latter part is because if you were, for example, a nonprofit school that burned, under the law, it says that you have to be actively engaged in the nonprofit purpose. A school that burned down is not, and technically it would lose its tax exemption. This bill will ensure that the tax exemptions can continue through the rebuilding process. In addition to relief for damaged property, the value of which has been otherwise negatively impacted, the current law for decline value, as I referenced earlier, would not normally be available until 2026 because the fires occurred after January 1st, which is the snapshot day that we value all property. Assembly Bill 245 by Mike Gibson will allow us to consider post-disaster damage and conditions when determining the property's full cash value as of January 1st of this year, meaning we can apply that decline in value benefit to the current year. Senate Bill 293 by Senator Sasha Perez allows the time for people to correct ownership issues with their property. One of the things we've learned is a lot of people inherit property from their parents, may have been generationally passed down from grandparents, and people may not come, a lot of folks have not come down to the county to change the names on the deed. And when they've applied for property tax relief, we're looking at the names on our records and they don't match the names of the homeowners. And the challenge is if your name is not in the deed, it's not your house. The law says that once we've discovered this deficiency, the property owner has 6 months to correct the ownership records, which we don't think is sufficient time in the wake of these fires. So this bill will extend that period to correct these ownership issues from 6 months to 3 years. And then finally, under Senate Bill 603 by Senator Roger Niello, allows counties affected by the disasters to have the authority to extend the period for base year value transfers under Proposition 50 from 5 years to 8 years. Proposition 50 is a program that allows you to transfer your tax base from your current home to a new one should you choose to move. All these things are going to be really important to help people take full advantage of property tax benefits in the wake of these fires. As I mentioned previously, we began unrolling the assessed value reductions to reflect the fire damage to both land and improvements, as many of the properties damaged or destroyed by the Eaton fires and Palisades fires need. These misfortune and calamity reductions automatically generate notices of assessed value change, which I referenced earlier. These have been mailed to wildfire affected property owners. The number and nature of notices issued to an individual property owner will depend on the complexity involved in the assessment of the property, namely whether there's only a, a misfortune and calamity reduction or also a pre-fire escaped change in ownership or new construction. What this means, let's say you did new construction in the last couple of years. We are a little bit behind in processing those changes. It is possible that you may end up getting a what's called an escaped assessment or something that has not previously been taxed for a piece of property on your for a structure on your property that was damaged or destroyed that you had not paid taxes on. This will be cause a lot of confusion and uh, undoubtedly annoyance for people. Some of you may be aware that there has been an increased amount of public service related to this notice of assessed value change for misfortune and calamity. One of the biggest issues is that a lot of people are very confused about what this notice says. For instance, a home may have burned down in its entirety, but when you got the notice of assessed value change, it still applies 50% of value to your home. And the reason for this is that your property tax bills were prorated. We work on a fiscal year from July 1st until June 30th. So if your home burned down on January 7th and you get a bill for tax bill for 50% of the value, that reflects the time from July 1st of last year till December 31st, which you are still responsible for the taxes. The January 1st until June 30th is zeroed out. It does mean you're going to get a tax bill for a certain amount of money, even though your home is gone because of but that reflects the proration between the two different tax years. And we placed a sample notice and graphic to explain the proration process on our website under the disaster relief web page. Also, to keep you updated on the status of your claim, we recently completed several targeted outreach campaigns to notify property owners about the status of your claim. You can now go on our website and see it'll tell you whether your claim has been approved or rejected or is still in process. And finally, anybody who's submitted a misfortune and calamity claim, I'm sorry, that's I'm repeating myself. But one thing I did want to emphasize as we get toward the end is the need to update your ownership records. As I stated before, we have legislation that will help people who don't have updated ownership records. But it's really important that the name on the deed reflects the owner of the property. And I some residents who have live in the family home and have been paying taxes may still have it in mom and dad's name. It is really important that you correct this information. It'll require that you provide uh, death certificates and proof of relationship between you and your parents, in some cases your grandparents, to demonstrate that you are and have been the owner of the property. A couple of things that I recommend. You're probably aware that there's a lot of scammers looking to take advantage of fire victims. One of the things we're concerned about is somebody trying to steal your property by recording a deed with the registrar recorder. We have a program called the Homeowner Alert Service. It is a free service. You can go on our website, type in your address, and register for the homeowner alert. Anytime somebody records something on your property, such as a grant deed or a deed of trust, you will receive, by registering, an email notification within 48 hours. That way, if somebody's attempting to record something on your property, you'll know right away. If you don't, the first notification you'll get is a letter from the registrar recorder, usually 30 to 45 days later. And by that time, they could have taken your property and leveraged loans against it, which will make it very, very complicated for you to get control of your property and your credit. You can also sign up for our Assessor's e-service account. You can register a profile with each property that you own, which will allow you to do a number of things online, such as updating your mailing address, signing up for the homeowner's exemption, and submitting a misfortune and calamity claim. If you have not updated your mailing address with our office, that is critical that you do so. You can do that again online. because that's the address that we have in file, which is usually the address of the property itself. That's where we're going to mail you your any documentation. That's where the refund checks are going to go. So it's really critical that you tell us where you are right now and where you want to receive mail. Um, that concludes my prepared remarks. I want to thank Mayor Riggins for inviting me to speak here today. Thank you all for your time, and hopefully this information will be helpful. I have a very talented team who are here on the call with me, who are going to help answer any questions that you may have. And here's all of our contact information and how to keep in touch with us.
Thank you, Assessor. And for those in the Q&A wondering if the slides will be made available, yes. We will send them to the City of Malibu, and we have given them permission to share these slides far and wide. I know there was some people who didn't see the slides progressing at the very beginning, so rest assured you'll still be able to see the full entirety of the slides. So I guess now we can go in and go through some of the questions that were submitted. And so, Assessor, do you see the question and answer key? Can you see the answers?
I do. Do we have somebody online who's going on to answer those questions?
Yes, we have Nicole White Gamble. She's right now typing and answering some of those questions. But I
Well,
think what we can
let me start with a couple of them. The first one says, please publish a rule that if you rebuild the same square footage regardless of value, you will not be charged additional taxes. So that was the nature of that bill that I sponsored, Assembly Bill 1253. That would have said that if you build up to additional 10% as the building code allows, you would not be taxed on that. The legislature decided not to enact that bill. It died in committee. I am exploring what other options are available to us administratively.
Sister, it looks like Nicole has answered a few question and answers over here. We could probably go through those too.
The next question says the biggest change in height of the new home is 19 to 20 square foot. I think I need to have Nicole answer that one.
Hello. Hello, everyone. Assessor Brigham, let me just see. I think I'm answering them in a different order. But let's see. Ian, can you see that question or read it out to me? Because I was typing.
It says the biggest change to their home is going to be it's going from 19 feet to 27 feet tall.
Okay, so in this case, it sounds like what they're doing is they're going to be increasing the square footage, if I'm reading it correctly. So in that case, there's two ways that we look at it. We try to do a comparison. Either you have like for like, which means you could build a very similar home. In that case, the measure we use would be simply, is it the same or less than? If so, you keep the assessment. The other way that we're able to look at it is in terms of market value. So we can do a market value analysis to see if essentially the value is the same before and after and make a determination. For both of those with our office, what we're going to do is we're going to make sure that whatever rule applies and is most favorable to the owner, that is the rule and standard that we will utilize in terms of the determination about whether or not their assessment increases or not. I hope that answers that question. Assessor Pray, you want to just go ahead and go through some of the ones that I can see that are here?
They're
talking about the height of the new home. In this case, if they're talking about the height in terms of stories, I'm sorry, then in that case, generally speaking, that would not be a determination for us. We're usually looking at livable square footage. That's not based on any kind of cubic or volume. So let's say if you just raised a ceiling and you're talking about that, that is not something that we would assess for, generally speaking.
Right. The next question is, should be able to keep your assessed value is not sufficient. Need a clear ruling that value will not be assessed higher if you rebuild the same or less square footage. the rule is if you build substantially equivalent, and substantially equivalent says that if it is roughly the same square footage and the same use, obviously if it's a 1,500 square foot and you today and you build 1,502, that is substantially equivalent. Under the previous guidelines, if you go as high as 10%, which is the nature of that bill I sponsored, that 10% generally would be considered beyond substantial equivalence. And I cannot give you a clear rule because we're dealing with property and assessment, which does result in some subjective analysis. But if you are within a couple percentage points of what was there before, you'll be okay. If you decide to add a major addition, that major addition will be assessed separately as new construction. Next question. Our property was not lost, but the value was declined. What proof is necessary to show a decline in value of our property? Nicole, is there anything more required other than an application for a decline in value review?
So an application is one of the things they can utilize to initiate this process. Obviously, if there's any kind of market data or if there's any kind of information that talks about amenities or things in their neighborhood that are now not available. I know we get lots of questions about smoke damage and things like that. That's something that someone can actually probably quantify after they have experts come in and provide us with that information. We will be monitoring these areas as much as possible to see what those market changes are. We're talking about the decline in value portion of it, but anything that you believe that substantiates the fact that your house was impacted unfavorably, then that is the type of data we would ask for. And in different situations that may vary based on what's available. But the application assessor, Craig, to your point, is the most important piece of it to initiate the process.
Okay. Thank you. If a home did not burn but is inhabitable due to smoke damage, is there a property tax reduction claim allowance? Yes, as long as the damage exceeds $10,000, and we are, it appears that most smoke damage properties do exceed $10,000, you would qualify for misfortune calamity, and you should submit an application. Somebody else has asked, will somebody reach out to me? I presume that if we submit an application, will somebody reach out to them? I think the answer to that is yes. Is it?
And Assessor Frank, I'm asking them as a couple people to share their information in a private chat. So if they provide us their information, we can follow up. Otherwise, they can go to our contact form, which will give us all the information that's required for us to go ahead and reach out, which would include your property information, your assessor's parcel number or the situs address. And then also, of course, we would need your email and phone number, contact information. But if you do that, we will follow up.
Right. So this next question is from the same person. I'm not a little confused by it, but it says, we filled out the misfortune and calamity claim, but no one reached out. We've received a notification that because we have a permit to rebuild, which we don't because we can't afford it, they can't assess the loss.
Assessor Pring, on that one, I did actually reach out to that person privately, and I asked that they provide our information because I'm curious to know if this is something where they're communicating maybe with building and safety and the assessor's office, but I think that it would be more important to get information so we could clarify exactly how we can assist in that case.
Okay. Next question, in regard to Senate Bill 293, can this be used to reassign the ownership to the same people, but for a different type of ownership post-divorce? It sounds like you're talking about two people who may have been married and are now divorced.
Yeah, that one's like has a lot of pieces to it, Assessor Pring. I think there's not enough for us to work on that one. But of course, we talk about interspousal laws, those are different. And obviously, if someone's been divorced, then a lot of those may not apply. So I don't know if there's enough there for us to answer.
Whoever submitted this question, if you could email us some more specifics, we can get you a better answer because I don't think we have enough information to answer that question. Next question, if I rebuild my home and my square footage is larger than my prior home, how will my taxes be reassessed? So if you build, let's say you have a 1,000 square foot house and you build an additional 500 square foot house, we will restore the tax base to the first 1,000 square foot of your rebuild. The additional 500 square foot will be assessed as new construction. We used a cost-based methodology to determine the value, the market value of that addition. And what would, let's say your 500 square feet costs you $100,000. 100,000, that $100,000 will be attached to your pre-fire assessed value. So it'll be a blended rate. Another question, somebody said they paid their property taxes already and are waiting for their refunds. Refunds have already been reissued. I would ask you to check to make sure you updated your mailing address. It's possible that your tax refund has already gone out but was returned because we didn't have the right address on file. Another question, the FAQ page on the website that we shared lists acceptable documentation for a change of address. It appears to be down, so we'll ask staff to check to make sure that is working. Nicole, this next one, somebody had smoke damage. Have not been able to occupy their home as a result of awaiting remediation. How do we revalue a property that's been damaged exclusively for smoke damage?
Yes, Assessor Pring, in that case, generally speaking, it's really helpful for us to get information from the actual owner themselves. So many times if there is smoke damage, someone may be trying to remediate that problem and they've reached out to someone to help them with that. Those types of estimates or those type of repair costs information is very helpful for us in those regards.
Okay. Thank you. So Nicole, I am going to turn the remainder of the questions over to you for all of our viewers. My apologies. As I mentioned, I am back east and I need to get to an airport. So I'm going to sign off at this point. My very capable staff will help you through the rest of these questions. Nicole is our foremost expert on these issues, and I'm sure she'll be able to handle any of the questions that may come up. But thank you very much for allowing us to visit with you this afternoon. Hopefully this information will be helpful. And of course, please contact us if we could answer any questions now or in the future.
So good afternoon, everyone. I think there's been several questions I've been trying to answer as we go through at this point in time, but maybe between Alex and Ian, if there's some ones that you want me to highlight, we can see if we can address those. I do see one that's saying, as I'm scrolling through, we paid our taxes already, and we're waiting for money back since our house burned. So again, with this, when it comes to us doing reassessments, we did reassessments proactively on several tens of thousands of properties. And those have processed through. And so for those cases, most people should have already received some type of notice in the mail that lets them know that we've reduced their assessment, their property assessment. And then those refunds will actually be issued through the auditor's office. They have been going ahead and sending those out. What I can say is vitally important is that you make sure that we have the correct mailing address on properties. So what we found is in talking with the auditor who is sending out these refunds, some of those refunds have come back because the mailing address, it's been returned to the auditor's office. So in the presentation, it was talked about the importance of that. You can go to our website. You need to officially go through the process of submitting documentation, which would be your license to prove who you are, because you want to make sure that someone's not fraudulently changing mailing addresses in hopes of getting your information when they shouldn't. So there is an online process where you can do that. And that is one of the most important ways to assure that you're receiving the most up-to-date information from our office. And when it comes to our other property tax partners, tax collector or auditor, you're receiving bills as well as refunds for property taxes that have already been paid. Okay, I see another one says I had a guest house and main house, but for the rebuild, I'm only building one house And to join the square footage, will this be considered over 10% if I added both units? I think for some of these particular ones, it's gonna really depend on exactly how and when. I think there was another question where I had said that it should be, you should receive your assessment if you build smaller or similar square footage. In most cases, that's gonna apply. Obviously, sometimes there's differences because there's two different standards that we have to look at when we do this. So again, when we start talking about both the guest house and trying to combine that square footage, this would be something where I really would refer you to our appraisal staff so they could actually look at your property and give you the best information at this point in time, so that there aren't any surprises on the other side of it. And then someone saying that they just want to increase, no increase in square footage, but just changing basically the height of the second floor. And again, in this case, we would not consider that, using the square footage standard. We would not reassess based on just changing the height, of the floor. Okay, it says, thank you for the check, but it was addressed to our trust, not us as the trustees. Our bank won't deposit the check unless it is addressed in our name. After many phone calls, I was told to email your office to get the check reissued, but I haven't heard back. So two parts of this, when we start talking about refunds and checks, that is the auditor controller. We will work to facilitate in any way that we can in terms of working through that, but this is really something that has to be addressed with the auditor. I will say that the reason why it may be in the name of the trust is because of the recorded documents. Generally speaking, that is how we would look at it. So when someone records a document and they put it in the name of the trust, for the assessor's assessment records, then we would put in the name of the trust as well. In this case, again, like I said, you can contact us and we can facilitate working with the auditor, who is the one who has the check, to see how we can rectify and remedy that situation so that you can actually get that signed. It says if there haven't been many land transactions in our area, how do you reassess the land value? You're right. This has been really one of the challenges that we've really had to look at in terms of how we can look at market data, in the absence of market data, and use different types of other approaches to kind of find out what those values can be. Obviously, we would like to use information that's directly in that area. Sometimes that may force us to use sales that are outside of the area. We also have different things that we do, like land extractions, etc. I can tell you we're doing the best that we can to get good information, but you're right, the lack of sales in this particular area does make the appraiser calculations a little bit more difficult, and we have to be a lot more thoughtful in terms of how we're coming to that those conclusions. Okay, I think we've talked about the way that if someone builds something that's larger, what we'll essentially have to do is the square footage that was existing before will be protected, and then anything above that will be added as addressed as a new construction. So we'll have to add on to that. So in this case, I'm seeing a particular example is 600 square feet. I can't tell you exactly how much that reassessment would be because, of course, when we're looking at anything, even in terms of cost, it's based on the quality of the construction, the type of materials, etc. So I can't just give you a quick estimate off the top of my head, but I can tell you that if it's additional square footage, then additional assessment will be added, or value will be added to your assessment. I see here it says, I purchased my home in 1985. The market value today is markedly different compared to then. I'm 70, retired, and on Social Security fixed income. Is my property going to be the same if like for like? So you're getting into that key part of Prop 13, which basically says, when we look at our assessments, they're either based on one of two things. When you purchased, and so your assessment is based on when you purchased in time. And so if you build like for like, yes, you will go back to that previous assessment. It's only if you build more that then again, you'd have a blended assessment, which accounts for what you had before, plus the additional new portion would have additional value added to it. It says, what if you keep the square footage the same, but break it up between a main house and an ADU when an ADU did not exist before the fire? We get this question quite a bit. There is a potential that what will happen, and again, these are very specific questions that I would really like to refer to our appraiser staff, but one way this might be addressed is you may end up getting some kind of credit for the smaller house, but the ADU is a separate unit, so it may be assessed at fair market value. So there might be an offset that happens in that situation, potentially. In regards to Bill 663, does the house need to be finished within years or started within 8 years? That part of it, unfortunately, I'll have to defer and we'll have to respond back because I don't have enough information on that bill to be able to respond to you on that question. It says I had 1,674 square feet prior between my house and a small guest house, which should have been included. This is kind of getting into, before I read into all the details, I think the key here is basically someone saying they have what we would call a main primary residence and they had another unit. In this case, it was a small guest house. And they're asking, can they combine that square footage to create one unit and us consider that? Again, we may have to look at the two different types of structures and decide if there is an offset or not. One, is there an offset because the other one is larger and you're building less? And then also consider for that other piece of it, how we should account for it. So it really depends. And I think for some of these specifics, I can tell you that we have appraisers who are working and who you can reach out to are really trying to now delve into some of these particulars and give you very detailed information based on your particular questions and situations, which can vary. Okay, so someone says we will likely can't rebuild, but certainly can't rebuild if you cannot tell us we will not lose our tax base rebuilding the same or less square footage. So pretty clearly I can say if you rebuild, and like I said, there's two sets of provisions, but if you rebuild at the same or less, you will keep your tax base. We're talking about square footage. Will ADUs be counted towards reassessment? Will the ADU, so I think we've talked a little bit about that. And so again, an ADU is separate. And so again, the question will be if it existed before. I do know lots of people are now considering adding ADUs. And that kind of goes back to that whole response about us having to do an offset in terms of how we look at those. Okay. Is there a way to see if a refund check was sent out? Yes. If you go to the property tax portal, and Ian, maybe we can drop that in there later on, both the auditor and the TTC, depending on the timing of it, they do have timeframes that will let you know if a refund has been sent. Having said that, because sometimes it will take time for their websites to update, I would say that for the most part, if you have questions about a refund and you want to know if it was sent or not, I would direct you to the auditor controller for those questions. And then depending on the types of refunds, there are instances when the tax collector is doing them, but I would probably start with the auditor. And I believe on both of their websites, they're launching ways that you can put in your information and see if it has been sent. It won't give the details of where, because they had concerns about fraud, but they can at least tell you whether or not something has been sent. And then again, to find out about the specifics for yours, you can contact them. And if you find out for any reason that it was returned, then this is a really good opportunity to go to our website and make sure that you're updating the mailing address information, because that will be vital. So let's see. It says, I'm not seeing an email address to get in touch with people. So if you look at it on our website, we have a contact assessor form. And the reason why we like you to go through that, that vehicle is because based on the types of questions, they get directed and routed directly to the subject matter experts in that area. So that is the best way to get it to the very specific office and to the right unit that can address your question. So if you complete all that information, that is how you can go ahead and get your questions answered. We also have a wealth of information on our website, but I think in many cases, you probably have very specific questions. And so that is the best way to do it. Also on here, I believe, Ian, if we can also provide the information for the West District office, then they can contact us by phone. But email is, or the contact form is a great way to reach out to us, be able to do that at your leisure. It doesn't have to be during our regular office hours. and then someone will get back with you to make sure that they respond to those questions that are pertinent to you. We have brought in many people, including some of our retirees who've come back specifically to help us address this issue and provide service. Okay, yes, so I'm seeing someone saying that they had 4 APNs or 4 parcels, and they're saying there are some total loss ones, and there was also vacant lot parcels where they did not receive any kind of relief. In this case, when it comes to misfortune calamity, generally speaking, you have to have a structure on the property for us to apply it. Now, if there is an issue about these being treated as an economic unit, this is one of those specific cases where I would say it's really important to reach out to our office, and we can evaluate whether or not it is more appropriate for us to address this as one economic unit, essentially all 4 parcels as one package, or whether or not it is appropriate based on where the improvements are to treat them as the different parcels, to treat them separately. But this is something where I would say it's really important that you reach out directly to our office, and we can evaluate and look at what kind of assessment methodology was applied and determine what's appropriate. Okay, can you explain the cost-based blended rate used for people to increase the square footage of their home when they rebuild? I think the easiest way to put it is let's say, and I'm going to make a very simplistic example, but let's say if you had 1,500 square feet before the fire, and I'm picking up, like I said, an arbitrary number, and your assessment, so your assessment pre-fire, the day before the fire, you had a particular assessment. That is what we would put on it. Now, let's say post-fire, you add 500 square feet. In that case, we'd have to, based on when you completed, the materials, the quality of it, et cetera, we'd have to make a determination, and we'd have to value that separate 500 square feet. But when it comes to your assessment, the reason why we're saying we're blending it is because we're taking the old assessment that you had before, we're adding the new value, and we're coming up with one assessment. We're not looking at the property as a whole and revaluing the whole thing. We're taking the parts, what was existing before and what is new, valuing them both separately, or taking the assessment we had before and putting them together to get your new assessment. So that's when we say a blended type of assessment, we're saying that we're using the new portion versus the old portion. This is kind of similar to, let's say there was no fire at all, and let's say you had a home and you built a pool. What would happen is we don't reassess your whole property. We value that pool and we add it on as a certain date to your property. Similarly, that's what we would do if you exceed the square footage that you previously had pre-fire, or make some kind of a significant additions to your property. It says, how much time is a period of time? This is probably a follow-up to one of my responses. And so I think this has to do with the residency question. When we're saying the question I received earlier was essentially someone was talking about the Prop 19 base year value. Prop 19 affords you the opportunity to be able to transfer your base year value if you're 55 years of age or older. If you have a disaster or wildfire, which we're looking at in this instance, or if there's a disability. And so for these, in the particular scenario they shared, this was someone in this damage state, you are able to transfer your base year value. Let's say you decide that you want to go ahead and you want to sell your property now. You want to take that pre-fire assessment and move it to another property. Prop 19 does afford for that. In the particular question that they asked me, they're saying they've moved out of their home and they plan to rebuild the home, and then they would like to do a base year transfer after they've rebuilt the home. One of the requirements of just a Prop 19, if you're 55 years of age or older, is that it's your principal residence. And so what I said is they would have to reestablish their residency in order to meet the requirements for a base year value transfer in that scenario. And the question is a period of time. There's no set prescribed amount of time that you'd have to move back into the home to establish it, but you would have to be able to establish residency. Sometimes people can do this using their utility bills, etc. Or the easiest way to do it is you have to qualify for a homeowner's exemption. And if you qualify for a homeowner's exemption, then you've met the residency requirement. Yes, the reason why the appraisal staff cannot provide an estimated pre-build is because, again, when you're giving us the information, some of that is, I won't say it's hypothetical, but we don't have all of the information and factors. We have what you are planning to build, and so with that, it becomes very difficult for us to give estimates, because again, things like quality, things like types of materials, all of those things become factors that we have to consider when we're determining whether or not to reassess or not reassess, or if we're going to reassess, at how much. And that makes it complicated. There's no cookie cutter home, and then also there's just no set dollar per square footage that would apply across the board. As you all know, those factors come into play. What happens to my property assessed value when, if I rebuild my home? The reduced value remains in effect until the property is fully repaired, restored, or reconstructed. So let me just say this: the reduced value does not stay in effect until you complete all of the work. Every lien date, which is January 1st, we have to go in and determine whether or not progress has been made. So let's say that a house is 100% destroyed. Let's say in 2 years, you've now done so much work that it's 25% rebuilt. On that lien date, which in this instance would be, let's say 2027, as of that date, we would have to start to restore 25% of the value. So as you make progress, we, based on the code and law, we have to go back in and evaluate what kind of progress is being made annually, and then incrementally restore you to your assessment. Once you've fully rebuilt, then it goes to 100%. But incrementally, in between those years, we are to increase it incrementally based on the progress that you are making on the rebuild on that property. So, but to finish this question, it says the reduced value remains in effect until the property is fully repaired, restored, or reconstructed. And I've just explained that is not the case, that incrementally we will have to start to restore the value. The second part of this is if the full cash value of the new replacement improvement does not exceed 120% of the full cash value of the older, damaged, or destroyed improvement, then the trended base year value of the prior damaged, destroyed improvement will be restored without any adjustment. And that is correct. So I told you there are two standards that we utilize in terms of making our determination. One is strictly on square footage, like for like, and the other part of it, provision, is based on value, and it gives 120%. But it's very important that we know that when we're talking about the 120%, that is based on value. And also between the two provisions, there are different time constraints for when you can apply one or the other. What if I buy another house, property tax issues, Prop 13? So I think if you buy another house, that's when Prop 19, the base year value transfer exclusion, which you have to apply for, but that would be one of the options that you could utilize in terms of being able to take your tax base and transfer it to another property. However, with that one caveat is if you were to buy something that the market value is substantially higher, then there is an adjustment that has to be made on that. So let's say if you had a house and it was worth $2 million, but you buy another house and it's worth $4 million, then we have to do calculations. The $2 million assessment for your old house the day before, if it was worth $2 million, we would protect that portion of it, but then the additional amount could be added on for the base value transfer. So again, if you choose to move, that is definitely an option. Prop 19 is the exclusion you would be utilizing, and there's rules about whether or not you get to keep your current assessment, but if you buy more in terms of value, then there would be some adjustment, but it would not be for the full price that you purchased for. You still would get some exclusion benefit from that. Okay, so now we're getting into bedroom bathrooms. If I had a 5-bedroom, 3.5 bath, but it built back a 4-bedroom, 4.5 bath, would that now fall out of a substantial equivalency? And this is one of the ones, I'll be honest with you, that is really a tricky one in some regards. In some markets, we could say if we looked at the market value standard, that's a change in bedroom bathroom count would not really impact market, right? So it really is going to depend on how the market looks at it. I will say, obviously, if you build like for like in terms of square footage and bedroom bathroom, that is a very simple thing for me to respond to because there's no differences. I would say in this one, unfortunately, the question will be, it depends. It may not result, but this one's a little bit more difficult because this depends on the market. You know, in some neighborhoods, if I say the house is 3-bedroom, 2 versus 4, 3, that could have a significant difference in terms of what that home would sell for. In other neighborhoods, a half a bath or a full bath may not sway the market as much. And those are the types of difficult decisions and considerations our appraisers will have to do. But I will say that we really are working to give the most favorable decision based on the parameters of appraisal standards and also in terms of revenue and taxation code section and what it allows us to do. And Assessor praying with him, working with the legislators, that's been really his intent, to make sure that there is the most equitable and the most relief available to people who've been impacted by the fire, unfortunately. Ian, I don't know where we are in terms of time. I think we're getting to
We're
the
pretty
last.
close.
Yeah, I
We're
think
pretty
we
close. We're
are.
about 2 minutes away. So maybe we do our final question. And then all of this will be posted online. And if there's any further questions, I posted in under one of the answers a link for you to schedule an online appointment with our West District office. If you follow the link that I posted in the Q&A section, you can go and schedule either an in-person or a virtual appointment that you can take from the comfort of wherever you're currently residing at. And it will save you a trip down to Culver City or downtown. I highly recommend you take this approach if there's any questions that were not addressed. Also, these slides will be made available to the City of Malibu, and this presentation is being recorded as well so that you can refer back to it. Or also, the City of Malibu will share these slides as well to the community for more information. Any anything from Malibu?
No, I don't have anything to add.
Okay,
Thank you very much.
sounds good. Thank you everyone for showing up. Thank you, Nicole, for stopping by and answering everyone's questions. Make sure and we will be in touch very shortly. If you have any questions, I'm also going to input my email so that you can reach out with any individual questions, which I can forward to people throughout our office, and we can help get them addressed. So thank you everyone for showing up. And thank you for the City of Malibu for having us and having us here to present and share our resources.
Yeah, thank you. And one thing to note for the participants, I'll upload this presentation to the city's YouTube channel, and the recording and slide presentations will be available on maliburebuilds.org. And we'll also post this on social media and other areas to find it. But if there's uh, any issues finding this presentation in the future, you're welcome to reach out to City Hall and we'll be able to assist you.
Great. Thank you guys. Thank you everyone.
Thank you.
Thank you.